Jonathan Barratt joining in, Chief Investment Officer, ETO Markets. Jonathan, great to speak with you. Very good morning. We'll just get a quick view from you on the trade rate for India and where it looks acceptable or palatable from an Indian market's perspective. Where would you put in 20 to 25%?
Look, I think good morning too. Look, I don't think you'll be set at about 20-25%. I think it just makes good economics. So that's a Trump thing. He comes out or blaring, and then we'll settle down and do a good deal. I actually feel it'll be in line with global markets. I think it'll be in line with the EU. Remember, India is such an important trading partner with the US, and it can't be disadvantaged against others. So I actually think a tariff rate will come in around that 10 to 15%. It just makes sense, but that's just the way how Trump operates. He goes in high, but then eventually it comes down to something that's more economical. And you can't put one trading nation against another trading and make it disadvantaged when you're all competing for the one market.
Make of the supposed truce, Jonathan. Very good morning to you, between the US and China, and I think a lot of markets, a lot of watchers of markets, paying attention to that. How deeply do you read that, though?
India and the US are friendly, as Trump has said. So
I was talking about China, though. I was talking about the truce with China.
Okay, with China, well, that is a very different set of circumstances. There are so many levels towards any trade deal or any tariff. Remember, China in itself, just looking at the last economic numbers, is starting to falter again. So I think China is going to be quite protected in terms of what it does with its stimulus. Also, China has a bit of a bat, obviously, with Russia. So this could be a bit of a flare-up between the two, because it's such a complicated transaction to actually put together. If it does it, I think the global commodity markets will have a sigh of relief if they can come up with a transaction. But I do think it's a fair way off, because there are so many moving parts to it that it's very, very complicated. Remember, China and the US are at odds already. This will put them further and further apart if they can't come up with something.
Jonathan, just one quick word on crude as well. 2 days now, we've seen a bit of an uptick on some optimism. But the worst case geopolitical scenario has seen crude retreat from a peak of 85. You reckon that's about it, even if the economic outlook were to pick up post the trade deals being signed?
Look, I think generally you get the trade deals out of the way, and then hopefully you'll see the way for demand. Look, the way crude oil is pricing at the moment, I think if it does break through here, if you look at the WTI contract, breaks up through 70, 72, Brent contract, then I think it can quite easily go to 75. I can see a good 5 to 10% rise in crude oil prices whilst we are still trying to flounder in getting a deal together.
Jonathan, thanks so much for taking the time. A pleasure speaking with you as always.